Hey tradeologists, today we're going to talk about technical analysis. And even though I don't put a large emphasis on picking market direction, that does not mean that I don't want to keep track of the market and try to understand at least where it's going to determine how to manage my risk. I think it's actually a pretty critical component of trading successfully. I wouldn't suggest that it's something that you can do without. I think you really need to pay attention to where prices are going, because remember, there are 4 risks in this business, but the obvious risk is price. Because if there was no price risk at all, then we could simply put on our trades, collect our theta decay, and we'd make money every single month without any risk. Price is the risk that we manage, and in order to do it successfully, we need to have an understanding of where prices have come from and where potentially they are going. What we're trying to do essentially is determine the highest probability of where prices are headed. To get started, what I usually do is I take some very, very long-term charts on the Dow Jones Industrial Average. I also take a look at other long-term charts of the major averages like the S&P 500, the Wilshire Index, or the IWM, the Wilshire 2000 or the 5000. But normally, I like to start with the Dow Jones Industrial Average because it is the oldest index that we have available to give us some information. And if you take a look at this, this is a pretty unbelievable chart. I mean, it's just, frankly, just unbelievable where we've come from. I start the chart back in 1923 here. You can see the 1929 crash here almost looks like just a little tiny blip. It really doesn't look like much at all, does it? Historically, it was a big deal. It was an unbelievable percentage drop in the Dow Jones Industrial Average. But when you look at it, boy, it looks pretty small. Let's zoom in on that just for a second and see what we can see. You can see that prices, this is back in 1929 on September 3rd. Now this is the month of September. Prices hit a high of about 380. And they dropped off dramatically over the next few years, as a matter of fact. But these 2 months in particular are the worst months possible. It went from 380 down to 270, almost a 33% decline in prices. So, but does this look familiar? Yeah, it looks very familiar. We've had a lot of different price movements like this over the last, practically 80 years. So this is not unusual at all for us to take a look at, because this is how prices move. They move up and they move down. Like I said, I don't like to predict price, but not knowing the price, not knowing the risk of price is a very dangerous thing. There's only a couple things that you really need to know about price and some technical analysis tools that I'm going to give you in this video. But you really should have a very good understanding of those tools, and they're very, very simple. Let's zoom back out again and see what else we can see. You can see that actually, because there was back in 1926, there was a huge run up in prices. You can see how exuberant these prices are. Previous to that, the high was right around 110 on the Dow Jones Industrial Average. It broke through here, and it just kept going straight up. So the fall was even more dramatic at that point. Not only did it come back to the 110 level, but it broke through that all the way down to 40 back in 1932. Was there another period recently in our history in which prices like this occurred? Of course. Let's take a very close look here. prices maybe didn't go down as dramatically in terms of prices, but you know what? From 2000, we had a pretty dramatic rise here. We broke through this level here in which I have this channel. Now this channel goes all the way back to 1932. And then here, right in here, this date is February 1st, 1995. So you've got a channel here that went all the way back to 1932 that had not been broken, and it broke in 1995. You know, that was only 13 years ago. And look at the kind of run we had from 1995 all the way to 2000. That was a pretty dramatic increase in prices there. And then it backed off, and it did fall, but you know what? It never went below that. It never went below the level here that it broke out at, back down to 4,500. So this decline that we saw over the next couple of years, from 2000 to 2003, is relatively mild compared to the decline that we saw back in 1929. Were there other periods that we had a dramatic decline? Yeah. We can go back here to October 1987, in which again we had a tremendous run-up in prices. That run-up in prices was met with some resistance in the 2,700 level, and prices dropped off dramatically from there. And yes, I mean, that was a pretty big move at the time, going from all the way from around 2650 down to about 2000. You know, it's over a 500-point move. It was very dramatic, but look what happened. Prices continue to go up. In fact, we surpassed that 2700 mark, kind of broke through that, came back down, and started back up again. There's an important lesson here in taking a look at these past run-ups and subsequent price declines after these huge run-ups. And I'm sure you can tell what that is now. The fact is that whenever prices become exuberant, in other words, they go up in extreme price movements compared to the levels that they were, then there's always the potential for a dramatic sell-off. That happened here in 1929. Here's another tremendous run-up in 1936, 1935 to 1936. Look at the sell-off there. Here's another one, although the price run-up wasn't quite as dramatic, it did back off and start to go into a trading range. That was in 1946. Here's some more of a run-up, but it's a little bit more moderate. It's not as exuberant, is it? So we had a little bit of an up and down market for quite a few years here, from 1950 to 1954, until it finally broke out here in the beginning of 1954. Again, we had a very exuberant upward trend in prices that was met with some resistance and started backing off again. But what happened? Prices recovered and they went up again. Then they started to fall, and then they went up, and then they fell, and then they went up. You can see that this pattern repeats itself over and over and over again. Now this period here is very interesting. From 1966's high, which was right around 1,000, all the way, let's see if we can find the breakout here. The breakout didn't occur till 1983. So from 1966 to 1983, prices were basically in a sideways pattern. You know, that's 17 years of sideways action. Now we had a number of different rallies, and we had some declines, we had some rallies, we had some declines, we had some rallies, we had some declines. But for 17 years, prices basically didn't do anything. And look what happened.